Imagine a luxury sports car brand, synonymous with high-octane thrills and James Bond adventures, suddenly hitting the brakes on its ambitions because of global economic turbulence. That's the stark reality facing Aston Martin right now, as it slashes £300 million from its investment plans amid unexpected losses fueled by Donald Trump's tariffs and sluggish demand in China. It's a story that underscores how international trade policies can ripple through even the most prestigious industries, leaving everyone wondering, how much more can one company endure before it shifts gears? Diving into the details, Aston Martin revealed on Wednesday that its losses before tax skyrocketed to £112 million in the third quarter of 2025, that's a whopping 9 times higher than the £12 million from the same period last year. This isn't just a blip. The iconic brand, famous for its appearances in blockbuster films, has been wrestling with worldwide challenges throughout a 5-year effort to turn things around, consistently plagued by substantial financial shortfalls. For newcomers to the world of luxury cars, think of it like this: Aston Martin is trying to revamp its entire operation, but external forces keep throwing sand in the engine, making steady progress feel like an uphill race against time. The company had already flagged earlier this month that its profits for the year would fall short of earlier forecasts, largely due to a dip in sales. In the third quarter alone, Aston Martin delivered just 1,430 cars to retailers, marking a 13% drop compared to the previous year. Over the first 9 months of 2025, revenues tumbled 26% to £740 million, down from nearly £1 billion in the same timeframe last year. It's a clear signal of tightening belts in an industry that's all about aspiration and speed. Adrian Hallmark, Aston Martin's chief executive, summed it up by saying, "This year has been marked by significant macroeconomic headwinds, particularly the sustained impact of US tariffs and weak demand in China." He went on to explain that the team is actively reviewing their future product lineup to streamline costs and investments, all while pushing ahead with groundbreaking, top-tier vehicles that satisfy customer cravings and meet strict environmental rules. In simpler terms, they are optimizing to cut waste without sacrificing the innovation that keeps enthusiasts excited. Imagine refining a race car to be faster and more efficient without losing its edge. But here's where it gets controversial. As part of these adjustments, Aston Martin has already postponed the debut of its maiden electric model and trimmed 5% of its workforce back in February. The company plans to unveil more details about additional changes early next year. Meanwhile, they've just rolled out the first of their Valhalla supercars this month, a mid-engine plug-in hybrid beast priced at £850,000, or over $1 million per vehicle. With plans to produce 999 of these powerhouses, Aston Martin is banking on delivering at least 150 in the final 3 months of the year to boost its finances, and encouragingly, more than half are already reserved by eager buyers. It's a glimmer of hope in a challenging landscape, showing that high-demand limited editions can still draw crowds despite broader market woes. Aston Martin has been under the stewardship of a consortium led by Canadian fashion magnate Lawrence Stroll since early 2020. Stroll, who built his fortune through brands like Michael Kors, envisioned transforming Aston Martin into a luxury giant capable of challenging Italy's Ferrari for supremacy. Yet, almost immediately, the COVID-19 pandemic threw a wrench into the works, forcing the company into a tough restructuring phase that involved paring down dealer inventories. Then, production hiccups and a weak Chinese market triggered a sales downturn. And this is the part most people miss: enter Donald Trump, whose policies have compounded the issues. The US president slapped a 25% tariff on imported automobiles effective April 3, 2025, building on an existing 2.5% duty. This move has stirred chaos across the global automotive sector, inflating costs for brands like Aston Martin in one of their vital markets. For those unfamiliar with tariffs, picture them as extra taxes on imported goods, essentially making every Aston Martin car more expensive to buy in America, which can deter sales and squeeze profit margins. On the flip side, some argue these tariffs protect domestic jobs, but others contend they just raise prices for consumers and invite retaliatory measures from other countries. It's a classic trade-off debate: are tariffs a shield for innovation at home or a barrier that stifles international competition? Adding to the mix, demand in China has stayed stubbornly low, described by Aston Martin as extremely subdued, due to economic slowdowns and a new luxury car tariff slapped on additional vehicles starting at the end of July. Stroll, however, remains optimistic, stating that 2025 has thrown several unexpected challenges at the brand, but his faith in its long-term prospects is unwavering. So, what do you think? Are tariffs and global economic pressures a necessary evil to protect local industries, or do they unfairly burden companies like Aston Martin? Do you believe Stroll's confidence is justified, or is this just wishful thinking in a turbulent market? Share your opinions in the comments. Let's discuss whether these challenges could lead to a stronger comeback or signal deeper industry shifts.